Well, it's another Manic Monday. Oh, it's Tuesday. Is it Terrible Tuesday? Is it Tantrum Tuesday? Huh. We got to figure it out, folks. We got a lot of weekend news, the old weekend news dump, a lot to discuss. Tariffs back in the picture. And just when we're worrying about that, do we need anything else to worry about? How about the yen carry trade? How about Japanese rates? How about them going up? How about that hurting our tech stocks? Our tech stocks are getting absolutely destroyed more than the market. Earnings, we could talk earnings. Triple M, not helping the industrials after a big run. We got that to cover. We got Tim Quast at 8:35. Not a market structure Monday, but on Tuesday, folks, we got a lot to cover. We're going to get it started. We're shorthanded, but you know what? We're ready to go on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, we got that lower open and we never look back. We're down 95 handles. That's the bad news. The good news is we're about 40 handles off that pre-market low. See if we can get some of these losses back. Oh, the buck getting smoked. That's down a buck at 98.22. Let's dump U.S. Treasuries. Does that sound like a good thing to do? Heck yeah. We're down 70 cents here at 87.06. USO popping up here, 63 cents, 72.28. Gold and silver absolutely on fire in this inflationary environment. Runaway inflation. We're up 3% on the GLD. It's moving so fast, it's called 434. SLV, man, that's up twice as much, 6.4%. That's over $5 on the SLV. 86.16, that's what you're looking at, SLV. And Bitcoin not participating, hits that wall at 95, looks like a breakout, turns into a fake out. We're back down at 90K, 91,255. That's down $4,410. These charts are brought to you by TradeStation. Chart, analyze, customize, all in one platform, all in front of you. Looking forward to working with TradeStation, helping us figure out these markets in 2026. And Dennis, usually the market goes down when I'm gone, right? And now the first day I come back, you give me all this work to do.
So
What's
it's a
going
Joel
on?
indicator going. Well, it kind of had a bad Friday, though. So we were down a bit there. And a lot of stocks were kind of weakened and maybe nervousness into the weekend here. So we won't completely blame you for this one here, Joel. But, you know, there is so many things. If you want a wall of worry to climb, this is one of the biggest walls that we've had in a very long time. We can worry about, you know, the geopolitical situation with Greenland. We can worry about, you know, the situation that's going on within the U.S. itself, obviously, in Minnesota. We can worry about so many different things. Japan, rates exploding here, higher again. We can worry about the carry trade. We can worry about everything if you want to worry. But you know what this market has done and done again and again and again? It has climbed the wall of worry. So does it do it again? I'm asking for a friend and for myself. Chat, what do you guys think? Do they buy the dip today? Because that is what they usually relentlessly do. There's a lot of risk. I'm going to tell you, there's a lot of risk in this market right now. But this market loves to climb a wall of worry.
Well, I guess if you look at it, we are off the lows of the pre-market session. We do have this little thing, Davos, going on. And I believe right now in Davos, correct me if I'm wrong, I might be off on my times, but Larry Fink is supposed to be speaking, and Macron from France is supposed to be speaking too. So who knows? I mean, if you don't have enough headlines already, you could be getting some more coming out this morning. But you know, we didn't talk about tariffs. We didn't talk about a trade war. But now, boom. Right back on the table.
Yeah, so the weekend, lots of headlines being dropped. Obviously, get a 3-day weekend, and Trump's been busy on his social media accounts here. Um, Potentially putting a 10% tariff on 8 NATO countries unless they get a deal with Greenland. So EU threatening retaliatory tariffs back as much as $108 billion. So the tariff war starts here again. Also, 200% import tariff on France wines. Tariff, tariff, tariff. He called himself the tariff king this morning or yesterday. Definitely the tariff king because he puts them out there like nobody's business. Also, just to throw another thing for you to worry about here is the Supreme Court. There were rumors that they could rule against Trump's tariffs today. Now, we don't know if they're going to rule for or against, but I believe PreMarket had a 72% chance that they could rule against Trump's tariffs, and we could actually find that out today too. Now, we don't know when the Supreme Court's going to rule. Everybody's still speculating here. It could be a long time away. But at a certain point in time, they are going to rule. And are they going to rule that they have to repay them all? Well, that's going to be more things for this market to worry about. But, right now, what this market's doing is just de-risking. Let's just look and go through the charts here, Joel. It's probably the best thing to do here right
Okay.
now. We'll bring them back up. I mean, the S&P futures I've obviously sold off overnight. But, you talked crypto already. We can get to that a little bit more when we have our Hive segment here. But just across the board, tech stocks are getting hit. I mean, we were very crowded on a lot of names. Google down 2.7%. Meta down 2.1%, Amazon down 2.4%. You go into the smaller stocks, like the IRENs and those, they're all, they've been up very strong here. So, they're very crowded. They're off 4 or 5%. The nuclear names, Oklo, NNE, SMR, all down 4%. So you're seeing de-risking here. Market is taking profits amongst the uncertainty here. And it's going to be a tricky market to call. Like if you've got somebody that says, oh, I know where this market's going, stop listening to them because nobody knows where this market is going. Nobody knows with certainty. We can guess. Buy the dip mentality has been out there. Would not surprise me if they try to buy the dip here again. But we don't even know what the next headline is going to be. Like Supreme Court, all of a sudden, middle of the day, rules against Trump's tariffs. Well, what does that mean? Well, we know it's good for stocks like, that have obviously are big importers, like a Lululemon, like a Nike. Deere has been complaining. But, what does it mean for the overall market? How does the market digest, potential that the U.S. would have to pay back all these tariffs? There's been $300 million worth of tariffs collected here, or 300 billion. Yeah. So 300 billion. Sorry. So, I mean, this is just, the thought process here. I don't know. Like this is so much uncertainty.
You know what? What's even more, if you want to add to the absurdity, is that he's tacking on or potentially tacking on more tariffs when it's not 100% that the tariffs that he already did are going to be upheld.
I know.
So we're like, it's if you'd have never have had a cat chasing its tail in politics more than you have right now, and what the outcome is, who knows? But
nobody,
absolutely nobody. I want to see how the EEM is reacting. EEM, emerging markets, are down a little bit. But let's drill down on the yen and the yen carry trade, right? And let's look at where we're at here, because you have tech. All right, the yen been weak, and basically, they say, okay, the U.S. says it's okay for us to raise rates. We're going to raise rates. Okay, that puts pressure. Not only does it put pressure on U.S. treasuries because they can get better yields with the Japanese bonds, it puts pressure on U.S. stocks, right? Because a lot of the carry trade has been to buy the cheap yen and to buy tech stocks. Now, if you look at the S&P down 1.42%, and you look at your tech stocks, they're all down more than the market. NVIDIA down over 2%. Microsoft down. Microsoft a little bit more commensurate. Amazon down. Google down more. All these things are down 2%. We all know what happened in April with the carry trade. Don't know if you're going to see that exact same scenario again. I guess the actual rate decision is going to be later in the week. But here we are. Another thing to worry about.
Yeah. So, that's the question. So what do you do now? Well, I'm invested pretty heavily into this market. I'm still fully invested. Like, I have some cash. You always have a little bit of cash. And, I'm diversified. You get some healthcare stocks, get a little bit of this, a little bit of that. That's the way I've always been in the long-term portfolio. As a trader, I mean, you're watching the headlines. You've got to be trading the headlines because things move. The next headline's going to matter. We don't know, one, what Trump's going to truth out today because there's going to be more Trump social media posts and they're going to move the market. Two, we don't know responses to all these social media posts here. Three is we don't know if the Supreme Court's going to rule. So there's all kinds. You've got to be watching the headlines. I mean, you can say, your chartists and the headlines don't matter, but the headlines drive the bus. We're not going down today because the chart looked ugly. We're going down today because the geopolitical risk is higher, and we don't know where this is going. We're going down today because of the tariff tantrum, the title of the show. So this is, the reality that we live in as traders. We've got to be paying attention to the headlines and adjusting accordingly. At 8 a.m., it's going to be a much different market. By noon, by 3 o'clock, it's going to continue to move. But what we can do is just update you and keep you looking at what's moving here today. And what's moving is, stocks are weaker. What's moving? Defense. I mean, look at gold. Market is full on playing defense here. It doesn't know what to do. In times of uncertainty, gold and precious metals go higher. They are exploding higher. Gold, GLD, new all-time high. Silver breaking out, new all-time high here as well. I mean, this trade has been going on for a while, and maybe it's been predicting all the geopolitical uncertainty here, but holy, these are exploding higher.
All right, but what's not exploding higher and going in the opposite direction is Bitcoin. We had the bump up over 95K. Things were looking pretty good. Now it's going with the market. It's not going with the precious metals here. I mean, you're looking at, it hit resistance. You had people, we're breaking out 95K, 100K. So, people are caught here, and it's just, maybe tied into the yen carry trade, but there's just more risk. It's a risk off market, and you don't have more of a risk asset than Bitcoin, right?
It trades like a NASDAQ stock. It always has for the last 2 years. 2 years prior, no. But we know this, Bitcoin is a risk asset here. So when you're de-risking, naturally people think, oh, this is what Bitcoin was built for, built for uncertainty, built for geopolitical risk. Well, it maybe was built for that, but the people who are holding it are no longer those same people. This is, a lot of risk, takers are in here now. So I think, when you have uncertainty, it's not digital gold. It is now just a digital stock. And Bitcoin moving down here with the overall market telling you that this Bitcoin, not a war trade. I mean, Palantir, I want to talk about this here too.
Before you do, I just want to tell everyone that this show is sponsored by Hive. Hive Digital Technologies, a global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. Scan the QR code on screen or visit the link in the description above to learn more. We got some great interviews coming up this week during our crypto segment. So awesome. Crypto, right back in the trading ring.
Put the Ethereum chart up there too, because these two are just moving like now there's just arbs in here. They literally are just trading Ethereum and Bitcoin perfectly together. I mean, when you look at the charts from the last 3 months, Bitcoin and Ethereum are trading identical. I know I say that all the time, but it's fun. I mean, these charts, like in the last 2 months especially, they're ETHE, IBIT are exactly the same. It looks like it's the same thing. Like you talk about correlation. It's got to be 99%. In the last, and they've always been correlated to a certain extent, but certain crypto does certain things. They separate. There's outperformances here. I mean, these two charts, Joel's trying to do.
There you go, dailies. You got the dailies right up with each other.
This is Bitcoin versus Ethereum. Look at the last two. It's the same exact thing. The lows are identical. I mean, these are two completely separate instruments here. And you got Bitcoin and Ethereum. They're the same. So I don't know if it's just ARBs or just now high frequency traders is trading directly against each other. One moves, the other one goes as well. But it's they're the same thing. So, that's just something to consider. I mean, if you're trading here and Ethereum starts to tank, your Bitcoin's probably going to go too. So, that's what, I love to trade as relationships. That's, my main gig is, knowing that, hey, if this moves, then this is likely to move too. So, I mean, you can just play this relationship, this Bitcoin Ethereum. It's playing almost perfectly. Will it separate again? I'm sure it will. But right now, they're just trading these things together, and they're definitely not trading them higher. on geopolitical risk, because geopolitical risk is when straight up gold, silver moving straight up. These stocks look nothing like that. So continuing to call Bitcoin digital gold, probably not the case. At least not for now.
Yeah, definitely a decoupling here. So if we don't have enough with Davos, and we don't have enough with tariffs, we don't have enough with gold and silver signaling runaway inflation. Natty gas is on a tear here. We could comment on the stocks on a second here, the individual stocks here. But what you had over the weekend is India signs a $3 billion LNG agreement with the United Emirates, vows to double trade as U.S. remains elusive. Holy mackerel. That's what we need. Higher natural gas prices, Dennis.
Throw it higher. Let's just throw another thing to worry about here. You get your natty gas bill and you're like, oh, what's going on? Interesting. The stocks really, LNG is one you think about, and it's moving up slightly higher here, but this is a huge move overnight in UNG. I mean, if you just bring this up, it's up 17% here right now. So here comes some inflation. I mean, we worry about inflation. You want to worry about commodity inflation. Precious metals, one thing, gold, silver, but natural gas, people use this stuff. So you don't want to start seeing this price start to explode here too, because this will hit everyone in their pocketbook. So is it a one-off? Is it a one? And, it's just going to continue to fall. I mean, UNG always, is because of the rolls all the time, is maybe not the best, investment vehicle here. But I think it's just something else to throw in the mix, something to worry about. I'm really torn. Part of me wants to say, let's just go blindly buy the dip because it works like 90% of the time, it seems like lately. Obviously, I don't have any stats on that, but it just feels like, we're just coming off all-time highs. Every dip keeps getting bought. But, then part of me thinks, well, what if we continue to see escalation? What if we do, start to get into a violent situation with the whole Greenlands? Maybe there's an invasion, it's not off the table. I don't know where this is going. So, part of me also thinks like, why not take a little money off the table and de-risk a bit? And that's what the market is doing here this morning. It is doing exactly that, taking a little bit of money off the table and de-risking for all this uncertainty.
Now, the UNG is trading up 17%, and we all know that is not with the rolling of the contracts and everything. That's not a good, really good
investment. No.
But what about natty gas stocks? They got to be ripping.
Well, that's what we just said. LNG not up that much. It's the one you look at here. It's moving up higher, but hesitant. When you see an 18% move, you're going to let natural gas stock like LNG, you'd think that would be up more than 1%, but a little bit hesitant here. So, there's others, as well, you can go and look, but I mean, natural gas is probably not, anything really for the market to worry about. There's so many bigger things and bigger fish to fry for this market here right now. I don't want to sit here and just cover natural gas all morning and saying this is, it's one more thing to throw on the worry. But I think the big things, let's just stop for a second. The big things the market's going to be looking at, the headline drivers today are probably not going to be natural gas. It's going to be one, what is Trump truthing next? Where is the Greenland situation going? Are there any more threats of more tariffs? Is there any EU retaliation, further EU retaliation? And then obviously the Supreme Court decision on tariffs is huge. The market is going to move on that. I can't decide if it I don't know the direction of the overall market on that ruling. Like if you would have said back in April, it would definitely be higher because we didn't want tariffs. But the market is now comfortable with tariffs. It's comfortable with them at 15%. The markets went to all-time highs with tariffs in place. So at least the U.S. markets. So I don't know, if they rule against Trump, I think the knee-jerk reaction is probably actually, I don't know. What do you think? Chat, what do you think? So let's just say hypothetical situation. We're not the Supreme Court. We don't know what they're going to do. Let's say they rule against Trump and say he's got to pay all his money back. What's the SPY do on that? Because, some stocks are going to benefit. Other stocks aren't going to benefit as much. I think the defense stocks go down because obviously we're talking about $500 billion worth of tariff money trying to finance some of these defense, stocks. But certain sectors. But what about the overall market? What about SPY? Which way does it go?
I don't think they're gonna rule on this while he's in Davos.
You may be right.
I mean, with enough uncertainty, I haven't looked at PreMarket lately, but PreMarket is, it's last we looked at it, what was like 70% that they were going to be rejected. But if they're rejected, they have a plan to go around it. I mean, whatever the short-term reaction will be, who knows what the long-term I mean, it like you said, like your Lululemons and some of these stocks, but then they'll come out immediately a statement and they'll figure out a way around it. So I
And
think you just
they're already doing a workaround plan. So Trump has no intentions of paying back the tariff money. So he's going to find a workaround somehow here. But does the market get spooked on this? Does the market applaud it? Does the market say, hey, maybe this slows down all the tariffs? Because we can see the market clearly still doesn't like the idea of more tariffs. We're down 90 handles today because of the 10% tariffs that were added on for the whole Greenland situation. So the market doesn't want tariffs, but then again, doesn't want to pay it back, doesn't want to be forced to pay it back. I mean, this is such an interesting time. I mean, one thing for certain, these are very interesting markets, and they're going to talk about this, obviously this Trump presidency for a very long time. We're 1 year into it here right now, and there has been so much change. Like it or hate it, he is the president of change, and he just thinks of something and then tries to go and do it. So, there's no talk, all action here. And, some of this action's applauded, some of it's not. But, at this point in time, it's just uncertainty.
Well, and it's uncertainty to see, what support, he's going to get from within his party, and well, we know where the other parties stand on a lot of stuff, but at one point, it has to be, be done in unison. A lot of things that you can say when you're getting off an airplane or sending in a text message, they're a long way from actual execution, right? Things can be said, but actions have to be executed. And that's where we're at right now. But right now, the market is telling you, I don't care what you think of the politics. I don't care what you think of analyst ratings. The market doesn't like this information. The new information that we got in the market, they're saying it's not good, right? And you just
At
have
least
to
at this
digest
point in
that.
time. But this market is finicky, and they could be buying them all afternoon. So I'm not going to throw in the towel and say
Okay.
sell it all. I'm not doing that here today. Let's talk some individual stocks, because
Oh,
we've been talking,
stocks.
and I know it's 20 minutes of geopolitical, and talking the whole Trump situation, but that's what's driving everything. So we got to paint the picture on this show. But there are little pictures being painted here as well. And this Netflix, PSKY, WBD saga continues here. We have Netflix now mending the deal. They're going WBD all cash at $27.75. Stock is still trading at $28.50. So obviously they think PSKY is still going to counter here. But at this point in time, we're looking at an all cash offer announced this morning at 7 a.m. For WBD from Netflix at $27.75. Netflix is trading higher here. It was one of our weekend trades, and they didn't go well here, folks, because obviously, got harpooned by the tariff tantrum. But Netflix was one of the good ones. It was the biggest position I had overnight. And, it was a good one. Why we were long, because we were saying, usually stocks trade ahead of the reports. The stock is really depressed here. I also didn't think this is one that they're going to hit, if all of a sudden you have geopolitical risks. It's not something you think about Netflix right away. It's been in the gutter. So it's natural for this thing to lift ahead of earnings. You get short covering. You also get, just that relief pop and sometimes excitement ahead of the print. So Netflix reports earnings tonight. I've sold it already here. I sold it actually on Sunday night, but it's trading up 1.26% this morning.
How's stuff trading in relation? Well, their stuff was probably much higher Sunday night, right? I mean, because the spoos, we didn't get the whole Japan kicker
The
yet.
Sunday night trade, it's funny. The Sunday night trade used to be all over the place, and it used to be like, oh, they have no idea what they're doing. There are more informed traders trading Sunday night now, because the pricing is pretty darn good. There was definitely a few, interesting ones. There always is, and some overshoots and undershoots probably. But I tell you, the Sunday night trade is starting to get a lot more informed. It used to be all uninformed. There was opportunities all over the place. They're hitting Coke down 5% back, when we had that headline that tanked the market last year. You're not seeing stuff like that anymore. The market makers are smarter that are running it, and also the traders that are trading on it, I think, are getting smarter too. I think you're just getting more informed participants on there. So I would say it kind of got a lot of stuff right last night, and a lot of stocks are still trading where they were on Sunday night. So, and the exchanges, it was, it's talked and being rumored here again that they're going to go to 24/5 trading as well. So, I mean, competition's coming for, the 24/5 market that obviously Robinhood and IBKR and, some of these other, are being run on Blue Ocean. But I would say the Sunday night trade is, not as crazy as it once was.
Hey, Dennis, you actually got you had no clean t-shirts or what's going on there, buddy?
I was just looking at you, Joel, and I was looking, at what you were wearing, and I was like, I wanted to match with you today. I thought, in the Brentster absence, I thought both of us would match. So I was like, nice, and I put on a nice collared shirt for you there. So.
Okay, because someone
I was also cold this morning. It is literally down outside minus 13 degrees Celsius, which is, like it's cold. Snow, another snow day. Why would it not be a snow day? The kids had a snow day yesterday. They have a snow day again today. Why would it not be a snow day? We have a snow day every day up here. So it is very cold. But back to stocks. We go on.
Okay, I'm sorry. No, let me talk about the Netflix. Let me talk.
Give me some technicals here.
Yeah, technicals. Technicals is that's the worst looking chart ever. The daily is absolutely horrible.
That's the one I want to go long.
And now we know that you don't file technical analysis because everything is saying that this stock is on a triple bottom. There's no such thing as a triple bottom at $88, right? But with Dennis, and this is a lot of things that we talk about and on the Stock Trader Network for idea generation. Okay, earnings, right? Even though you got this whole thing going on with the deal, they have earnings. It's a stock that historically in the past has beaten earnings, right? Even when it gets killed, maybe they didn't beat by enough. Maybe are they giving subscriber numbers, or I don't know if they're doing that anymore. But I think the big overhang on the stock was the amount of debt that they were incurring to do this deal. That's what people were really worried about. And now that they're switching to an old cash deal, it looked, or at least more cash, that's, that's making people feel a little bit better. So you got to pop. Your after hours high is 89.20. You're still there right now. That's over. It's not quite. Yep, it is over Friday's high. So if you're looking for a gap fill, that would be in the 88 handle. But do you think there's more left in the tank here? You're not even at Thursday's high of 89.89. So
I mean, here's the thought process here, and even for intraday trend, do you want to be short Netflix into this print? Because if you were short, you're probably doing a little bit of covering here this morning, like just squeezing, getting out of here ahead of the print. I mean, it's gone down so much; it's been really good for if you were on the short side. So that's what, why does, it work? And I've talked this, I talked this again last week, but I just want to repeat it. Why do we go long stocks ahead of earnings reports? Well, there's that natural drift higher, and it's for a number of reasons. But one, if you're short, and we're not saying there's a huge short interest here, but if you are short, you're probably not going to want to take it through the print. So that naturally puts some buying pressure in. Two, it's really depressed. So people are saying, well, it's a low bar. So if they say anything okay, it probably goes higher. So people speculating that maybe it won't be that bad and maybe it'll get a relief pop on the print. Two, and then three is media is talking about it. It's just a talk stock because it's one of the main companies that are reporting this week, and that can put upward pressure on it as well. So those three main reasons is why it's good to be long stocks ahead of reports. And if you were doing that overnight, you got a market implosion here, yet Netflix goes up. So it was a great overnight trade.
You talk about we talk about reactions post split too, right? And well, I got the post split hangover. I can't remember. I think it was right around, I don't know, maybe it already pulled off the high, but I can't remember exactly when it split. I think it was like maybe around 100, 110. Then they got involved with this deal. Also, if you want to talk about some natural buyers in the stock, what have you been good on your put purchase, right? And you own some puts, and you really don't, you don't really want to cover them. You can, if you have a large put position, you can take some stock, or you can cover it with stock. So a lot of different ways to look at Netflix. I know some people longer term, some of the longer term traders, they've been talking about 90, like give me 90. I don't know why they didn't. When they said this when it was at 110, I don't know why they didn't short it at 110 and wait till 90. But anyways, there's a level take a look at ahead of the report. We do have a report this morning, and Triple M here. They reported 3M. They beat 183 versus 180. Gap sales 6.202 versus 6.01. The guidance, well, why give guidance when you give 850 to 870 when it's 861 and then they adjusted sales guidance here? What a run you've had in some of these industrial stocks. Triple M taking a breather.
And a bit defensive. I mean, this is a stock that does trade with a lower beta than the overall market. It's a bit defensive. On a defensive day, you'd think it'd be okay, but just inline guidance. There's nothing exciting here. There's no reason to like, oh wow, I love that 3M report. Let's go buy it. So I think it's just absence of buyers here, probably bringing the thing down. Does the dip get bought on a stock like this? I'd say you got good support. I'll do the technicals on this.
Sure.
Joe, 158.45. You got back down to like 159 in November. You got back down December, like 158, 159. There's good support in here right where it is right now. Is this the day you want to be coming and buying a 3M dip? That's still to be determined. But what we can tell you is there is good support in here. So they're probably, if you were short the thing, I'd probably be bringing it in. Am I going long? I'm probably not going long 3M.
If you want to talk about confluence in the market, you got it really right to the T here. Your pre-market low comes in at 158 even. They stepped up in the last couple brackets. You had your low back on December 23rd at 158.45. Really not bolting out of here, so that could be one concern. But this is currently where you're trading at, and in the pre-market trading, let's see if the pre-market low is defended. I don't know what the heck happened in this day in October. It must have been earnings, had an absolutely crazy day. So you're really working into a bar with very little reference. But what we'll be doing early in the session and off the open, we'll be keeping an eye on the pre-market low. This went off the board. Let's call it 168. So we'll go with the 167.5. So 6 and 4, right? A little over 10 was the expected move. So you haven't even quite hit that expected move yet. So if they pound through this thing through the pre-market low, your expected move is just about $2 lower in Triple M. So there is a look at earnings.
Fastenal, quickly, before we get Tim Quast coming on here in a couple of minutes. Fastenal, I'm just going to give you quickly. In line, Q4. They did miss on the revenue. The stock is trading down 6.4% in the pre-market. We call it the nuts and bolts of the construction market and the market itself because it is the nuts and bolts, is what fastens, they got all the fasteners, the nails and the screws and everything that fastens things down in the building process here. So it's got good support here too, though, Joel. I like this 40 level.
Yep, not quite there yet. We're trading. The 200-day comes in at 41.19. So that level of interest, and the two lows just above 40. So that is a look at Fastenal, nuts and bolts of the economy.
They want to talk Palantir. I want to talk Palantir too, because we heard for a long time, Palantir is a war stock. Palantir goes up in times of geopolitical risk. Palantir just does everything. One thing for certain that we have absolutely learned in the last couple of weeks is that Palantir is not a war stock. This has not participated. Look at Lockheed Martin. Straight up, the entire January 2026. General Dynamics, straight up. You've got AVAV, straight up. Obviously, war drones, KTOS, straight up. Some of these stocks are 50, 60, 70% in the case of KTOS and AVAV. And then you have Palantir, straight basically down for 2026. At least you know where we are. We're sitting at 2026 lows. So anybody who's telling you that Palantir is a war stock, the market is absolutely saying otherwise. Obviously they do some stuff with the government. They do some stuff in there. Maybe eventually gets priced as a war stock again. But right now the market is saying no. This is not a war stock. So, Palantir trading down near the lows here. The technicals don't look great. It looks tired to me, but I know I'm going to throw it to you, Joel, here. We can actually even ask Tim when he comes on to take a look at supply and demand on Market Structure Edge. But what are your thoughts on Palantir? Let's bring the chart up.
All right. Let me, we just ripped through all those other stocks. Palantir traded down 460. More war talk. And you think, no man's land. Just let me give you the pre-market low here. Pre-market low is 164.63, and we have no daily lows in that area. I do not think. I'm just trying to find some confluence. Your next, 163.12. You have not hit that in the pre-market. So let's look at that as a potential support point. I got to reach out. I'm going to be gone for 1 second here to reach out to Tim. Dennis, we'll let you take one more. Well, no, I got it. We are going to be bringing on Tim Quast here in just 1 minute from it's not a market structure Monday, but it's a Tuesday, so we'll cover that. Dennis, I mean, people say we haven't been talking gold and silver enough and SLV, and I mean, it's parabolic.
We did off the bat, but what do you think? Like, let's just talk silver. Let's stop and talk silver here for a second, and let's bring Tim Quast into this conversation here as well. So let's throw up.
All right. Good morning, Tim.
Tim, you're on mute. Tim's on mute. You just got to unmute yourself at the bottom. Tim, you're on mute. Bottom.
There we go.
Got it. Okay. Happy Monday. Happy January 20th.
Did you hit some slopes this weekend?
I did not. No, I have Dennis. I have not been on the slopes yet.
Why?
Right. Well, our snow has been abysmal. And ours is
really
the best. Steamboat's up to now about 70% of normal. But as a spoiled ski resort dweller, I don't like to ski on a snow cone. I like champagne powder.
You're fussy.
We've had very little of it so far this year, but I expect to remedy that. We just came back yesterday from the lowlands down in Denver because the snow has just been unremarkable. I realize that's like a first world problem. When you're complaining about
I think so.
Right. But anyway, there are other things to complain about, I'm sure.
We were just talking silver before you came on, and I mean, this market runs obviously into precious metals when there's uncertainty, and there's a hell of a lot of uncertainty in the world here right now. Gold, silver, both all-time highs. Do you think this precious metals run continues? Is this just like overbought and crowded here now? What are your thoughts here? Let's talk silver.
Well, my view on how gold and silver behave, and you could pick any risk asset, but the attention goes to these things. We tend to forget that when this happened before, which was in the 1970s, what happened in the 1970s was 1971, we left the gold standard, and volatility in financial assets exploded, and inflation exploded, and the value of things that are meant to be stores, things that will retain value for you, exploded. And I would argue that we're in this, and it's like when you're standing under the Milky Way. It's hard to understand the vastness and the scope of it from wherever your perspective is. And I think the same thing is true here. We had this tremendous inflationary cycle, and this is all part of it. And we just don't realize where we are in it. I think stocks reflect it. Real estate has reflected it. Gold and silver are standouts in that whole thing. But things explode in value and then they try to reset. And the question is, will that happen? I don't know, Dennis, but I certainly, I'm at 58 years of age. I have had a lot of time to study history and understand it. There was a great book I think everybody should read called Millionaire. It's about John Law and the Mississippi Company and the great bubble that formed in France in the early 1700s that is in many ways very reflective of what we have today. It was the beginning of this whole central bank thinking about how can we financially engineer ourselves out of debt. And it worked for a while, and then it blew up. And I'm not a bear. I'm not particularly negative about any of these things, but I am aware. And I think as traders and investors, we have to think about this and understand what is the impact on the assets that we invest in and where should we be. So when does it end? It will end at some point.
Did you have to make up a new level on market structure edge for the SLV?
The beautiful thing about demand and supply is that they're constants. That it's very easy if you're looking at multiples of earnings or other ways to try to think about valuation metrics. It's difficult to get context. To me, look, I'm biased, but I think that quantitative market structure based measures that keep you focused on a 10-point scale, where are we on the 10-point scale? What is the supply relationship, is very helpful. And it's contextual here. Why on January 20 is the NASDAQ down 2%? And you could say, well, it's Greenland. Okay, well, there are inputs into how the market functions. But if one understands context, you can be prepared for these things. If you backed up to March 31, 2025, demand in the stock market, the way we measure it, was 6.1. Supply, which is our treatment of Reg SHO Rule 201 short volume, was 51.4%. And month-end options associated with the S&P 500 were resetting. Today, January 20, new options for February expiration are trading. Demand is at 6.2. Supply is at 51.9%. That is 52% of all the volume in the S&P 500 stocks is short. It's artificial. It's credit. So contextually, if something is going to happen, this is when it can be consequential. I'm not saying this will turn into some kind of rout. I will tell you that the all-time record from a demand perspective that the market has spent above 4. We say 6 is a top short term, 4 is an entry point. We don't get a lot of those entry points because there are more inflows than outflows into the equity market. The market is priced not by fundamentals or technicals, those are inputs, but by flows. You have to understand flows and look at who gets them. BlackRock had inflows of $342 billion in the fourth quarter alone. That's what the money is doing. That money, the portion that goes to equities, has to get deployed, and it has an effect on the market. So the all-time record was the pandemic boom. The market went 208 days before it broke below 4, an entry point, a breakdown in the market. So right now, it's 188 days. It is the second all-time longest period. The market was last at 4 in April of 2025. We have not been there since. So I look at those records and I think, there's the probability it continues to mount that things will deteriorate. And traders, you can use these things to know when you should go long or short. And I think it could be helpful. So
Tim,
that's
can you
how
bring
I
up
look at
Market
it.
Structure Edge? Can you bring
Yeah,
up your
absolutely.
platform here? Because we'd like to see it. I know the chat, if you have a ticker for Tim, let us know here.
Yep.
Obviously, there's lots of stocks moving here today, and supply and demand is a fun thing to look at here because it's more information. This is what we want to do, is inform you, and there's different styles of trading, and Tim looks at it, his in a very unique way, and I think it's helpful to a lot of traders as well. So jump in here, Tim, and we'll show you. He's bringing it up here right now. We'll throw a first ticker symbol at you. Somebody wanted to know. Well, somebody wanted to know General Motors. That's an interesting one we haven't looked at for a while. Yeah.
Okay, well, let's have a look. And again, this is demand and supply. It's not charts. You're not looking for patterns per se. We just want to understand the relationship between demand and supply. And so it's a 10-point scale. That's the green part of the graph. When it's hammering 10, there is huge excess supply. And what did the price do? Price rose. The price stopped rising when demand eased, right? It's still at 5. I would look at GM and say, it is being treated by the market as a value security. Demand at 5, supply declining. That's generally pretty good. Is this going to give you pounding returns? No, but that's pretty good. That's a divergence. When demand is stable and supply declines, you have a demand-supply imbalance, and you can use that to your advantage. And I will give you a comparison. If you look at Google, GOOG, right? So here's a classic example of, to me, one of the core things we use. We call it the Hicks rule because of a longtime edge user who looked at this condition and said, mathematically, this has a lot of merit to it. And there we go. So here's what I mean. When it hits 10 and supply declines, oftentimes you can get a really nice gain in a handful of days, 1 to 5 days. If it's down some today, that condition could very well give you a good return the next day. There are things that I will use. Like I might buy in the last 10 minutes of a day. Why? Because all the money that needs the reference price, the midpoint, is in the market then. And then the next day, you might benefit from this demand supply imbalance that and Citadel doesn't. I'm not picking on Citadel. I'm saying that you cannot outtrade Citadel during the day. I'm just using them as an archetype. But day over day, or if your investment horizon is a little longer and you know what the demand supply imbalance is, that's how you stack the probabilities in your favor so that you can take gains, not chances. It's a trope, but we use that.
How about Netflix heading into their earnings report here? Just getting a little pop this morning off their deal, but has the supply and demand lined up for Netflix?
And it's, they revised their offer to an all-cash offer for WBD.
Correct.
The data has very consistently shown that PSKY, Paramount Skydance, is the winner in that. And I'll show you how we can look at that. I don't think this may change the data. Right now, you have rising demand, but it's not very good. Notice that Netflix has had suboptimal. This is a 30 trading day view. December 4 to present. It spent some time at 5, but supply was very high at the end. High relatively speaking. It's low. It's a deal stock. People don't know what to do. The owners of the stock are not lending it out. How do we know? Because the levels are right about 30%. We call that the deal threshold level of shorting. Because the market has a lot more than that. People think short interest is the wrong thing to look at. That's a 1974 metric that was a byproduct of leaving the gold standard, interestingly. So when you have levels around 30%, that stock is probably in a deal. And so people don't want to loan the stock out. You don't know what's going to happen. But I'd look at this and say, rising demand, rising supply, it's not what I would buy because when they both move the same direction, they tend to cancel each other out. Nonetheless, you could say, well, can I buy a surge in demand? Yeah, you could, but your probability is lower. So immediately I would look at this and say, well, I'll find I'd prefer Google to that as a case in point. But let's look at WBD while we're talking about this, because you can do this. You can always size up deal stocks and get an idea of when the bidding is generally over. Here's an interesting development. So back here, go back to December and we'd say, okay, when supply begins to rise and normalize back toward 46, 47%, that tells us that the conclusion of the deal arbitrageurs at that point was that the bidding was over. But look what's happened. When you get a steep decline back to the deal threshold, the arbitrageurs had already bet before the news today that it was coming. And you can always be one step ahead, not because these data are some kind of genius. They're just a reflection of what everybody knows. And so if deal arbitrageurs do things and we can measure it. So they were telling us right here, oh, there's going to be more, there's going to be another offer. Now we're going to have to see how this plays out. The odds have changed. I would say now the odds have swung back toward Netflix a little bit, and we'll have to see how that plays out. Up to this point, till the last 5 days, I would have said it was 100% that PSKY was going to win it. Now that's changed.
All right, Tim, throwing out tariffs and throwing out the Japanese yen and throwing out natural gas. Give us all those factors here. Coming to your desk in the morning, what do you have? What trading idea do you have us from Market Structure Edge?
Okay, well, let's talk about what to trade. But look at natural gas. So this is just a small natural gas portfolio with 7 companies in it. It will tell us.
Let's see what's in there.
Okay, and it will tell us fast trading 30 days is leading. That's Citadel et al. It's the machines making markets. This is what we use as a proxy, just a proxy for natural gas. So, here's your set right there. So you might pick something else, but it gives us a pretty good idea. And you want to take an average. And if you can get the whole average of the portfolio here, I would say the good news is supply is declining. People are not short natural gas. Is money pounding into natural gas? Surprisingly, no. And so there is a divergence, rising demand, but it's way below 5. So right now, I would say, if this is you have to have a longer horizon. You could buy it here, and maybe 20 to 50 days from now, that could produce a pretty good return. But it's not optimal to me. So we'll see how it goes. In terms of ideas, we right at the top, we have this daily trading ideas. By the way, we have Joel, you and I talked about this, so we'll just tease this, that maybe we bring these things over to Stock Trader Network, but we have a regular Thursday discussion. And either, I'm often there, our chief market strategist, Brian Wilson, formerly of the Beach Boys, is there. Just kidding.
Nice.
And that's Thursday, 2:30 p.m. He says free. You could just come and we have this discussion every week about, strategy, what to do. Daily trading ideas, here, if you just picked one, ASTS is a pretty good example of what we like to look for. It has, it's had a lot of volatility, it was up 15% on Friday, I think. So that as an input, but you can look at this and say, we're trying to capture part of volatility. I always say there's demand, supply, and volatility. When demand and supply diverge, can you capture a portion of that volatility as a return? Gives you a very simple strategy. And we even calculate the probabilities. Nothing is 100%, but when we see these same conditions in the trailing 90 days, it has always been true that you could make at least 2%. You say, well, that doesn't matter. 2% a day is a massive return. No one can do it every day, right? But it's what you're after. When ASTS hits 10 and supply is declining in the short run, you can almost always produce a return. Happen here. Very nice return. So it still says that is possible. Now, again, this is data. It's not advice, but we look at an entry range based on volatility. We set a horizon of 1 to 5 days to produce a 2% or more return. And there's an idea. I'm not saying it'll pan out because options are resetting. The VIX expirations are tomorrow, by the way. So they reset and renew after the close and tomorrow. So beware of that. If we have a really volatile day, right when volatility bets, either long or short or resetting, it can have a significant impact on the market. So beware of that. And if you want to, where's the money going? I always come back to mega caps. There are 132 stocks with 100 billion or more of market cap. Always look at the demand supply balance in those because it's 75% of market cap. Small caps, everybody's enamored with small caps. They're 3% of market cap. If BlackRock puts 10 basis points more into that group, they can shoot up 10 or 15%. But it is not sustainable because there isn't enough of it for BlackRock to buy. BlackRock is always going to come back to the mega caps. 90% of ETF assets. There are 2,400 ETFs traded on that are tied to U.S. domestic equities. There are 4,400 ETFs traded in the U.S. market, but 2,400 of them depend on large caps. That's the problem. There are add these up. There are 390 stocks that are 20 billion to 100 billion of market cap. There are 132, 100 billion or more. And the entire market depends on those. So as those go, the market goes. And I look at this and say, it's fine, but look at the supply side. It's rising, demand is peaked. This is a point where the market could tip. I'm not saying it will, but all these things happen. And this is how events like Greenland have an impact. It's because of what is occurring in market structure.
All right, market structure head, Tim Quast, to put the site in there, get more information. Tim, great start on this Tuesday. Thanks for joining us.
Always a pleasure, guys. Have a good week. See ya.
Thanks, Tim.
Okay, 8:55, and we got a few more things to cover, but we got to do rating the ratings here. This is brought to you by The Fly, your source for over 1,000 breaking news articles daily delivered in real time with custom filters and alerts. Discover their new Fly platform with AI-powered company analysis with unique KPI charts for deeper insights. Scan the QR code or click the link in the description to learn more. So, out of day, with geopolitical risks at its heights, you still got analysts doing their work.
Oh, yeah. They're out there, and there's a lot of ratings. There's not a lot of whoa, look at this one. So there's not out on any major companies here, but a lot of smaller ones. Keep Riet downgrading RF. We've got Logitech getting downgraded at Morgan Stanley. Also NetApp getting downgraded to underweight at Morgan Stanley. I'm just kind of reading off because there's a whole pile of them. If you see one that you want to talk about, we can stop there for a second. Jefferies downgrading Philip Morris to hold. I mean, SO downgrade at Wells Fargo to underweight. That's interesting too. Utility company here, defensive, they're downgrading, that's underway. And then the upgrades, there's a few upgrades of note here too, and I want to focus mainly on that because we've had a lot of bad news here this morning. So let's try to focus on some good news here. We do have Intel catching upgrade at Seaport Global, and Intel, which is definitely a Trump stock, and you got to consider this too. Are we back, into this separations on companies that obviously have a government holding in them? Because that's works in their favor. Intel upgraded at Seaport Global. It's not trading higher here, but it's not down much. And tech is a wreck, so it's holding up because of the upgrade here. Give me some technicals and your thoughts on INTC.
It's a battle of the bulls and the bears. You do have earnings coming out later in the week. It's flat here. It's only down 3 cents after a bad day on Friday, giving some back. Let's look at the mark. I mean, right here, close near the low of the session, 46.71. You defend that low, get green on the day, get back over 7 and 47. Got some room on the upside. You breach that low, 46.71. Look out. You don't have another daily low for $1.50 in Intel. Probably a little position squaring here ahead of that report on Thursday.
Shake Shack, one upgrade that I want to focus on here. Stock, again, don't expect if you're upgraded, the stocks are going to explode higher here. The overall market is holding everything down. But here's another one that is catching an upgrade. If we were flat on the market, it'd probably be up 2 or 3%, but we're not. We're down significantly, so stocks are being held back. But Shake Shack is getting upgraded at Morgan Stanley to overweight. Analyst Brian Harbour upgrading the stock, raising his price target up to 125. We've not in the past recommended Shack and long struggled with sales volatility, TAM, value prop, desire to invest in the crowded burger segment. That said, 2025, solid in a tough, fast, casual backdrop. And if there's any year that has a higher probability of delivering better and more consistent top-line results, it could be 2026. They're upgrading 125. This is 22 times the 2027 EBITDA target there. So they're looking at Shake Shack, baby.
It's traded down 9 cents, right? A lot better than the market. But be looking at the mark, see if you can get a bid here over 99.12. Let's go out longer term. Longer term, you pierced that 200-day, right? And you got back above it. Maybe people just willing to peel out at the 50-day. That'd be the major resistance there for me at 103.43. But as you said, if this was a nice update in the market, they would be running with it a little bit more. But let's see how they closed on the low of the session too. So if this can be one of those, hey, let's defend the low, let's take it up. You'll see that early if it holds 98.93.
I want to go 2 minutes overtime here just to
2
talk
minutes
the overall
overtime
situation again here. AC threw us a $5 tip there. Actually, I think it's £5. Asking how low does the market go on this Greenland scare? We asked him a little bit this question, but I want to ask, you it as well. This is a hard question to answer because we have seen, is this just a scare? Trump is very adamant that he is going to control Greenland one way or another. This is not going away. At first, remember Canada, we were talking 51st state, a year ago or 9 months ago, and then that kind of went to the back burner here. Now it's been the focus on Greenland here. It's not going away. He wants it. he's basically hinted that if we can't buy it, we'll take it by force. So, I mean, it's all about escalation or de-escalation here. Is there a purchase of Greenland? Because this is not unprecedented. The U.S. purchased Alaska. So it's not like, whoa, World War III coming here. If he takes it by force, that's where everything changes, because now you have, all of a sudden breaking of NATO. You have Europe, torn on what to even do in the whole situation. You're going to try to fight the U.S., over Greenland, probably not. But I mean, there's so much consideration here. So what I can say is it all depends. If you continue to get escalation in the Greenland situation, the markets probably do sell off, because this is, just unknown, like a huge unknown. We never thought, NATO would break, but we are at a point where NATO could break here. And if NATO breaks, what does that mean? I'll tell you one thing. Russia is smiling on all of this. That is one thing we can tell you, is that Russia loves this conflict between Europe and the U.S. here right now. So, and we're adding fuel to the fire, saying, I saw a commentary coming from some Russian media source there talking that, well, Denmark doesn't have any rights. Russia wants the U.S. to invade Greenland because, one, it doesn't make them look as bad anymore for invading Ukraine, and two, they want to break NATO. Russia wants to break NATO. So there's so much to think about with this whole situation here. To try to say, okay, is this gonna, what's gonna happen? I don't think nobody knows where we're heading. So all we can do is say that this is a driver here, and if this Greenland situation continues to escalate, it probably pressures markets lower.
I'm not going to make any specific, comments, except that we talk tough, we don't talk tough. So I saw the comments when he was going there. He's going on CNBC tomorrow. I mean,
he's on with Kernan tomorrow morning.
He's on Kernan tomorrow morning.
Yeah, so pay attention.
I don't know if they'll say it's a great day to buy
Kernan
stocks or not, but just like the contrarian in me here, just kind of says, there'll probably be some little bit better news coming out. I don't think.
Are you going to see a taco trade? That's
there
the
you go.
we haven't seen that in a while, though. He's getting tougher. So I mean, it doesn't look like he's gonna back down. Originally, you're talking, well, this is just talk. He's not gonna go and invade. I don't know if that's the case anymore here. So I mean, this is what we just don't know, and this is why the market is down here. It is all uncertainty. And again, if you're just joining us right now, the three major points why the market is down here this morning is the increase, obviously, in tariffs that Trump has put in over the Greenland situation. Rumors of counter tariffs coming from the EU, but you also, have obviously, the Japanese rates going, which we didn't even get a chance to talk about, going significantly higher here over the weekend. So you have worries about the carry trade. What the carry trade is borrowing in cheap Japanese yen and then investing in, U.S. stocks. And I mean, if the Japanese yen is not cheap anymore, then all of a sudden, maybe that trade starts to come off. And how crowded is that trade? Well, that's a question mark too. So this is all why markets are pressured here this morning. But what we do know is the markets have climbed a wall of worry for a very long time. This is a big wall, but I wouldn't rule out the fact that the possibility that we could bounce again.
Okay, I will not end the show with the Tom Petty song, I Won't Back Down, because we don't need to get dinged by YouTube again.
Can we even mention the songs?
Can we mention it? Let me see. Let me see.
Will they fine us for mentioning them?
Oh,
it's so fussy. I mean, you just say one little hint. You're like, and then they're all over the algos. They know. They can't. There's no before. If there's people looking for it, they wouldn't see it. Those algos, if I just sang Free Falling right now, we're getting a YouTube slap.
No.
I can sing it. Free fall. Let's test it. Free falling, yeah.
No, I don't.
Now look for your email. See if it comes
now we'll get emails for voice lessons in the Greater Canada.
Oh gosh,
area.
You're right. They're like, no, definitely not the next Canadian Idol here or American.
I will tell you though, we did one of our videos was only banned in one country, and that was Russia. I
what was that for?
I can't remember what day
what
it was.
What do we do?
I don't know. I don't want to. I can't go. I'll have Josh look it up. But hey, folks, little bit short-handed today. The Brentster under the weather. Michael Feehan in the background, helping us out, doing a lot with it, folks. A lot to cover on this Monday. Going overtime on pre-market prep. But we got a lot more to figure out on the Stock Trader Network. If you haven't been joined or done a free trial yet, today's the day. We got a lot to cover on this busy open. Thanks for joining us.
Thanks, everyone.